Hey guys, it's Shadow Skinner. You already know the vibe. So I'm actually going to do something slightly different today. I'm actually going to do my first public teaching. So a lot of people know that I've been trading Forex for about a year and a half now. And I just want to share something that helped me kind of grasp the market. And I feel like this is very, very big. It's market structure. So I believe structure, whether beginner, intermediate, or advanced, I believe that it's a very, very good concept to know when trying to trade in any market, whether it's the crypto, Forex, HFX, any type of market. It's very important to understand this directional bias or structure of the market to basically to identify which trend you're trying to enter into, whether you're trying to get in for a sell or a buy. This will definitely help you. So just to get right into it, I'm going to use a presentation that I created for my team for our one-on-one sessions or educational lessons. So we're just going to get right into it. So basic structure, first things first, two things you need to know. One, the market only goes in two directions, up and down. And it doesn't just go straight up and it doesn't just go straight down. It creates a series of different patterns, right? And while it's making different patterns, you're going to see, well, what I'm about to break down for you, right? Also, when we're talking or referring to structure, you want to make sure it's clear that we're only referring to about structure, we're only referring to the open and close of the candles, right? You're not referring to wicks or whatever. They're so irrelevant when referring to structure. Structure is only valid with the bodies of the candle, open and closes of the candles. So let's get into it now, right? Basic structure, well, three phases of the market. You have the first phase, that's the expansion phase. You have the second phase, that's consolidation, and you have the third phase, the retracement phase, right? The market for this just the way that I put it for this particular example, but it could be either or. So in an uptrend, I have this identified as the expansion phase for this example, right? And during an uptrend, the market makes the same pattern over and over again, right? And what is that pattern? Well, I'm just gonna start drawing on my screen, but you have higher highs and higher lows, right? So you have the market constantly making higher highs, higher low, higher high, higher low, higher high, higher low, higher high, right? So that's all the market is doing in an uptrend, right? So your expectations during an uptrend is that every new higher high must surpass the previous higher high and close above it, right? And that every higher low stays above the previous higher low and closes above it. Now, just to go over that, brief it one more time, well, this higher high is right here. This new higher high is only valid because the market surpassed the previous one here, right? It surpassed the previous one there and closed above it here, right? Same here. This was the previous higher high. This new higher high, market surpassed it, right? Surpassed the previous higher high here and closed here, right? And here for the higher lows, I'm just going to clear that out. For the higher low, well, this was our previous higher low. As you can see, the market actually closed above it, right? So this is the previous higher low, and the new higher low closed above the previous higher low. Same thing here. This is the previous higher low, and the new higher low stayed above it and closed above. So when you're looking at uptrends, every new zone that is created via higher highs and higher lows, it closes above the previous higher high or higher low. As simple as we can get, right? Now for downtrend, phase 3 of the market, it's quite the same, but just a little bit different. Same concept, just slightly different, right? So instead of higher highs and higher lows, you actually have lower highs and lower lows, right? So when we're making lower lows, you're making lower high, lower lows, lower high, lower low, lower high, and lower low, right? So when the market is in a downtrend, well, here you have your new lower high. It actually closes below the previous lower high, right? And this lower high is right here. As you can see, this lower high closed below the previous lower high. Same here. This is your old lower high, and your most recent lower high closes below your previous lower high. Same thing for a lower low, right? So this new lower low actually closed below your previous lower low, right? Same concept. So this was your previous lower low, and the market actually came down, right? Surpassed the previous lower low and closed where? Right here, below it. Same thing here. This was your previous lower low. The market actually surpassed it, this lower low, and closed over here, right? So that is all the market is doing in an ongoing downtrend. Now, just to give you an open perspective, when the market is in an uptrend, if it's giving me higher highs and higher lows, well, you want to predict what the market is going to do based off of what the market has presented to you in the past, right? That it gives you the most realistic or the next best option to invest into the market, right? So if I'm getting higher highs and higher lows, well, here I have a higher low. I can only anticipate that the market is going to give me a higher high next, right? Until the market gives you clear new information, you want to continue with what it has already given to you in the past. So here I'm going to anticipate a higher high, right? After the higher high, I'm just going to anticipate another higher low because this is just the information that the market has given me, right? Now in a downtrend, same thing. The market gave me a lower high, I can only anticipate a lower low next, and then another lower high, and then another lower low. And it's going to go on and on because, well, one, I'm just going to, again, continue with what the market has given to me in the past. Now, just to highlight, looking for buys. When you're in an uptrend, you want to look for buys at the best price, which is your lowest price, right? You want to invest at your higher low points, right? When the market retraces to these higher low points, you want to get into the market for buys because that is the lowest that the market is going to go in that trend. And it's the safest part for you to get the most out of your money, right? The market is moving upwards. You want to get in at the lowest point while the market continues or proceeds upwards, right? And the same thing for a downtrend. You want to look for sells, right? And you want to look for your sells at your lower high points, right? These are the highest points of the market. While the market goes downwards, you want to get in at the highest point so that while the market proceeds downwards, you're actually getting in there right on time, right? So that even when it's retracing, you're still in at the highest point as it continues downwards, right? So yeah, that is continuing to trade with the trends that the market has given us, right? And I'm just going to go, I skipped phase 2 of the market, but phase 2 of the market is actually consolidation, right? And this is just healthy price action. The shortest way to keep this sweet and simple is it's the market going up and down in one direction. A lot of people see that support or resistance, or retail traders, liquidity, or price just simply trading sideways, right? That's as simple as consolidation gets. In my opinion, the easiest thing to locate or see, because support and resistance, everyone should know support and resistance. Not everybody, but if you've tried to invest, you should know that's one of the basic concepts. Now I'm just going to show you on an example, a live example in Euro GBP, right? The Euro dollar against the Great British Pound, right? So as you can see, I've already marked it actually. So this is the price trending downwards, price trending sideways, and price trending upwards, right? So as per example, well, this would be, let's say in this particular example, this would be phase 1, phase 2, and phase 3. Per example, I just used, this is phase 3, phase 2, and phase 1, right? So just to show you how to actually see it on the market, I always say if you can't understand structure to its best, just looking at it, you can always just switch to the line graph, and it kind of makes things a little bit simpler, kind of just seeing where the market gets lower or stays below in any certain area. But yes, so going back to the candle, right here, I have a lower low, right? And here we have a lower high. Then we have another lower low and a lower high. Lower low, lower high. This actually is our next lower low right here. Then we have another lower high, right? And a higher low. So I'm going to stop there for now, right? And I'm just going to explain how this works. Well, first of all, this lower low right here, right, is only valid because your lower low here, it actually surpassed market here, right? It surpassed the previous lower low and closed below it here, right? Same thing for the next one, right? This is our lower low here. Our new lower low actually surpassed the previous lower low. So structure broke past this lower low here and closed down here. So it closed below the previous lower low, right? And same thing here. I'm gonna actually get into that a little bit more in a second. But that's pretty much lower lows in the market and lower highs, right? If we're constantly, when the market is going down, if we're constantly looking for each new zone or lower high and lower low to be below the previous, well, that's what you're looking for. Here we have a lower high, right? And our new lower high actually stayed below this lower high and closed below it right here, right? So this is our previous and this is our new, it stayed below it, right? So then we have a new lower high. Well, then what happened in this lower high? It stayed below this lower high and closed here below it, right? So that is a clear picture of our lower high points and how new ones are created or new zones are found, right? And zones is something that we can talk about completely on a different video, and I will not touch base on it right now or in this video, but that is our lower lows. So here, that was us with price trending downwards. As you can see, we actually had a lower low here, right? Our most recent lower low right there and our most recent lower high right here. I'm gonna just draw that a little bit better. As you can see, price starts trading sideways. So this is the consolidation phase, phase 2 of the market. Why? Well, in this lower high and lower low area right here, as you can see, price struggled to actually break above or make any significant moves in this zone. So price is still trading in between this lower low and this lower high. Therefore, it's just consolidating in its previous zone, lower high and lower low, right? So we actually finally see some transition when we get this lower low, right? This lower low surpassed the previous, whoops. So this lower low surpassed this previous lower low and closed here. We actually seen a transition. So it went from trending downwards, then sideways, and actually making a significant move and closing below the previous lower low, right? Creating a new zone. So that is downward and sideways trading, or phase 1 and 2 of the market. Now going into phase 3, I kept saying we're going to continue to anticipate lower lows and lower highs until the market presents us with new opportunity. And I didn't really get into breakup structure here, but I will get into breakup structure in another video. Here we have higher lows and higher highs, right? We have the market making lower lows, lower highs. And then as you can see, suddenly it makes a higher low and then a higher high, right? And then another higher low and then a higher high, higher low and higher high. Well, there you can see the new information that this market has presented us. Well, you've seen the market going downwards and then suddenly it just stops and it starts creating a new trend, an upwards trend, right? So it actually went from a bearish trend to a bullish trend. So that is the new information that I've received. Now, why is this a valid uptrend? Well, As you can see, lower lows, you normally want to see the market surpass it, right? In this case, that's not exactly what happened. We actually closed above the previous lower low, right? And that gave us a higher low, right? That is the beginning of an uptrend. So we got a higher low. And normally for lower lows, well, what do we anticipate? When we get lower lows, or sorry, lower highs, you normally want to see a new lower high being formed below it. That's not what we got here. We had a lower high here, but we actually disrespected structure, surpassed it, and created a higher high. That was confirmation that we went from a downtrend to a uptrend, right? So after getting this higher high, well, we continued in an uptrend. Why? Well, this is our most recent or our old higher low, and this is our new higher low right here. And we closed above the previous higher low. Same thing here. This becomes our old higher low, right? And this new higher low here, it closed above the previous higher low. So it's a repetitive thing, right? And just to clear another thing up, right? Though we have the higher highs and higher lows, just to remind you, when we're in an uptrend, you want to constantly see the market going above its previous zones or previous higher lows and higher high points. And that's exactly what happens. So our lower high here, well, this higher high actually surpassed it and closed above it. So that's a valid higher high, right? And here we have a new higher high. But what happens next? We get a new higher high here, right? And it's valid because, well, market actually surpassed it here and closed above this previous higher high. And it just keeps going, right? We have this higher high here. The market surpassed it here and closed above this previous higher high. And it goes on and on till you continue to see ongoing patterns switching from up to down trends, and that is really structure. And we'll go more into zones and breakup structures on a different videos. And I just want to wrap it up there. Just a quick synopsis of what we just went over. When we are trading in a downtrend, right? A downward trend, you're anticipating the markets lower lows and lower highs to continue to close below its previous lower highs and lower low points. When market is consolidating, well, it's just trading sideways. It's not breaking any previous lower lows or any higher highs. It kind of just stays in the same zone. And when the market is trending upwards, right, we're actually getting these higher lows and higher high points above the previous higher low and higher high points. It's just an ongoing thing. I hope that was very clear. If you guys have any more questions or want clarity on something else, I'll be more than willing to explain it as best as I can. This is my first video. Bear with me. I'm hoping to get better with time. But thank you guys. Have a good one.